the purpose of what's happening in it. I'm now sharing a passive question on Berry Fashion. This is a merchandising question. Yes. Brianna, I'm gonna just ask you to kind of man the waiting room so that I can probably ignore it whenever it pops up on my screen. Okay.
Yeah, Teresa, we're getting the link for the live stream now anyway. So no one else needs to join the Zoom. I'm going to drop the YouTube link in this chat, and everyone in the chat just share it to their friends, as much persons as possible. All right.
All right, so I kind of want to want to jump right into it right now. I don't want to waste much time. So as long as when person join on, just let me know. If you don't understand, I first want to ask though, please respond either mic up and respond in the chat. Is there anybody on the meeting right now that is the first time you're doing accounting and you don't have much background knowledge in accounting? It's very important starting off because it means I'm gonna have to probably be a bit basic in my explanation of it. So kind of give feedback as to your knowledge in accounting. You're just starting out, never done accounting before, and you know much about it. All right, so I see what that means. So I'm hoping, having gone through the class with either one of the lectures, basic elements such as debit and what you and what you credit. I'm breaking. All right, it's be basic. Your responses. I'm gonna try as best as possible to be very. All right. So,
hey Teresa, they're saying
that what we did from what we created. Let me just go into the basics of that aspect.
Teresa, she got kicked off just now. Everyone, you don't need to join. You just need to send your friends the live stream link for them to join the live stream. I'm trying to see if I can get back Teresa up. It seems her internet is giving a bit of an issue. Thank you all for being patient so far. Just look in the chat. I'm going to try to see if I can send out the link in WhatsApp. If you're on this, you don't need to leave this meeting. You just need to send the new link to persons who aren't on the meeting.
You can go ahead and share once more. Are we good now?
You're still breaking up a bit. Persons, can you guys drop in the chat if you're hearing Teresa properly? See if you can share back your screen.
I'm about to share it back. I'm still breaking up. It may be my internet connection. I'm probably going to have to just join and send this to somebody, ask them to share it, and I just join on my phone to see if it can be any better. I'm clear now?
Yes, very, very clear. No hiccups.
All right. Once I start going out, just open the mic and let me know that you're not hearing me clearly so I can start. Run off into explaining.
Okay, now you're breaking up.
Yeah, you started to break up again.
I think it's because he's sharing screens. Is it possible for the other host to share the content?
All right, so I was basically going through the basics, jump into this question. We want to run passive. All right, I'm gonna try that way. Hold on 1 second. Let me get my chair from. All right, so on a better note, I'm gonna share the documents in the chat. So that way everybody can and just follow along and make markings on the paper because it's yours if you'd prefer it that way. Okay. Oh no. All right, so I'm sorry, the entire folder share instead of just the one file. So if persons are seeing the folder, it's marked PP question. The entire folder was not supposed to share, but it did. So I'm just going to have to pick the one I want from it. You're looking for a PP question, past paper question. That's the document you should be opening on your side and it should pop up. The question should pop up. Let me know if you're seeing it. If you're not seeing it, give me a feedback. Anybody hearing? It's in the chat.
Resend it, please, and I'll try to pin it.
If you can email it, anybody who is in the account 1005 group, if Teresa can email it to me, I can text you on WhatsApp and you can drop it in the group. All right, perfect. So Ariana, just send me your number. Teresa, email it to me and I'll do it. In the meantime, you can continue. And Ariana will drop it in the WhatsApp group.
All right, let me just email it to you, Brianna. Sending it to Hotmail. It's now in the chat too. So if person can pull it from the chat, it's in the chat as well. But I'm sending it via email. All right, so I was going to the basics. Assets. We had to trying to identify assets, whatever happens to them when we're dealing with a specific situation. Assets, when they increase, we debit. When they decrease, we credit. Liabilities and equity now is the flip of that. When liabilities and equity increase, we credit. When they decrease, we debit. The email is sent, Brianna. You can check on your end for it.
Was it my Gmail that you sent it to?
No, Hotmail.
All right.
Okay. I'm gonna try. Can somebody just share it? So it's in the chat. One of the hosts, can you please just share it for me so I can go through it? All right, I'm not seeing it being shared. I'm gonna try and share it again. And let's hope my internet don't act up this time. Let me know when everybody is seeing it.
We're seeing.
Okay. So, so I'm going to just start off with this specific question. And whilst going through it, I'll highlight specific areas that you need to bear in mind when going into exam, because these areas tend to be tricky, and they try to flip it on us. So if we're not paying attention, you can make a lot of mistakes, and these mistakes lead into other areas that you're going to be completing for the paper. So I don't remember which year possible question this was. I think it was 2017. I can't remember what year past it was, but I remember, I know it was one of the past years, past paper questions. The year end. Whenever you're approaching a question, always make note of what the year end is for that financial, for that company. So whatever company that they give you, the company is important because your header at all time. Never forget you have to head up every statement you do. You need to have the first 3 lines there. So very fashions need to be at the top, and then the specific year end. This tends to play a part when we're accounting for probably prepaid expenses or prepaid revenues, and how to reduce them when we're making adjustments. So we know that the year end for this specific company is June, which is halfway throughout the year. They gave us a list of balances that we're going to look through. But we're going to start by looking at the adjustments that they want us to make. So we're going down to the required in the paper. I think another thing where I'm supposed to identify inventory items in the business. That's number 1. We're gonna have to be necessary journal entries. They see that we have the trial balance here, but we also have some adjustments to make to the trial balance. We're gonna have to perform the most income statements. The statement of balance report. These are important elements. Pay attention because they how you're supposed to get it. We also have racial statements to reconcile accounts that were once in bad debt or written off because of bad debt. So whenever I get something like this, my best advice is to approach it by reading the question in full.
Sorry to pause you, but you're breaking up and you told us to make.
When you read the question in full, you're gonna jot things while slow.
It seems she dropped off. I must apologize, guys. Wait, she's on. Teresa, are you hearing us? Shania has her hands up. Shania, what's your question? She had asked someone who was supposed to share the screen for her. Her screen was sharing. Weren't you guys seeing it? I was seeing it just now. Teresa,
No, the problem is when she shares her screen, because she's sharing and
okay, all
speaking at the
right. So
same
I
time,
guess
they
one of
both
us will
said,
have to share this. All right, let me see if I can share the screen or Jenny will.
so that she can just talk.
sorry about that. My internet is very bad. I live in rural Jamaica, all the way in Hanover. So sorry, so sorry. Can I just get somebody to share for me, please? It kind of makes it a bit easier and
Give me a
reduce.
second, I'm loading the file to share it.
Genevieve is gonna share her screen. In the meantime, you all, if you need the document that we're using, Ariana sent it in the group, so you can look on it from there as well. Genevieve is going to share her screen, so we're sorry for the delay.
All right, so if everybody have the question, we can probably start kicking off like the first question. That's not much of a workout question, but more so a question to kind of read the paper and identify.
Let me know if you're seeing the screen.
Yes.
Yes, I'm seeing. Thank you very much, Jenny. So do the edit option, because I'm gonna want to make some jottings on the paper since I can't share.
All right, no problem.
So you're gonna be my scribe today.
Excited. Go ahead, Teresa.
All right, so first, it's asks you to identify the inventory system that was used in the business and how can you tell? So that question, there's two types of inventory systems that we have. We have the periodic and the perpetual, but through financial accounting, you would have been using only one. So anybody want to mic up and tell me what specific system they think is being used and why? If you don't want it, that's fine, but I really love perpetual. Thank you, Kenelia Hunter. I'm not certain if I got your name right, but yes, perpetual. And it's because you're seeing cost of goods sold in the trial balance. And not purchases and its affiliated accounts. So that's give you the option. If you're seeing purchases now, you know it's going to be the periodic method that's being used. So going down now, we're going to take a look at the adjustments. So scroll down to me to the adjustments for me, please. So we're going to be scrolling back and forth, Jenny. So looking at the first adjustment, store supplies on hand as at June 30th is 8,000. Scroll back up. So going back to the trial balance, and we see where store supplies is being debited for 40,000. So right then and there, we know we're gonna have to adjust this. It should say 8,000, but it's saying 40. That means we're gonna have to do a credit of 32,000. That's our first adjustment. So you're gonna be crediting store supplies 32,000. But that means, go ahead. Just add a sticky note right there, yes. So you're gonna credit 32,000. We can't just credit 32,000 right there, because we know for every entry that all right, I'm coming to your current name, McGregor. If it's a question or if you want to respond to this specific note, you can just go ahead and open your mic. If it's not, just give me a second, let me finish with this adjustment, and then I ask you to say your question. So we know that whenever we're making an entry, you can't just make a one-sided entry. For every credit, there must be a debit, or there must be a corresponding credit. So we're gonna be crediting store supplies for 2,000. But we also have another account that's affected by this. So if you scroll down in that balance sheet, in that trial balance, you should see a store supplies expense. right there. It's in the expense section. Scroll down. It's right there. So another hint I can give you is with the paper that you're gonna get. So if you realize this area is blank, it's completely empty. They normally give you hints throughout the exam. This is one of the hints that you're gonna get. There should be a charge where the empty slots are. It's just for you to figure out what charge it is. So right beside it, in the debit column, you're gonna debit it with $32,000 as well. And that would be a full entry. That's one of your journal entries that you have to make to adjust this trial balance for the actual balance. So if you can leave a note on it, if possible, Jenny. If not, then we can just move on to the other note.
I don't think we can make a note, but I guess you can move on because person probably making their own notes.
Okay.
Excuse me.
Yes.
There's a way to actually type on the document. If you use the thing beside of the pencil. No, the other thing on the other side. That here. No, not that, the one beside that, yeah.
Thank you.
Thank you very much. Courtney, that was Courtney?
Yeah.
Okay, then. So that's for the first note. You're gonna be debiting store supplies expense with $32,000. We're gonna be reducing store supplies with a corresponding credit of $32,000. Our next note, which is note 2, is saying that rent of $36,000 was paid on April for the 3 months to July. All right, so you remember earlier when I told you that you have to keep in mind what your year end is? Right there, and then you realize that we're paying for another period. July falls in the other year, which means we have a prepaid rent situation right here. You're paying on April, but this financial statement that we're creating is up to June. So that means there's 1 month that it should not be accounted for. So where you have prepaid rent, you're gonna have to adjust it. But what's the amount you're going to be adjusting it for? 36 represents for 3 months, which means 1 month that's outside. So 36 divided by 3 equals 12, which means that $12,000 out of the 36 should be for July, and that has to come out. So you're gonna credit for $24,000. 12. Continue. 36 divided by 3 equals 12. The name?
Amanda, I wrote it. Are you seeing?
Oh, yes, I'm seeing it now. Thank you. You're crediting for 24. Crediting for 24, so that's $12,000 leaves. So not 12. So you're crediting for 24 because you want to take out whatever is not prepaid. The only amount that's prepaid is the 12 because that's the only amount that's for the other period. The 24 is for the current period that you're in. So you're crediting for 24, right? Because $24,000 out of the 36 is not prepaid as it's for the current period. Only 12 is prepaid. So remember that for every credit, there should be a debit. So what's the corresponding debit here? Anybody want to help me out? Going down to the rent expense section.
Rent expense.
Thank you. So rent expense should have an additional $24,000 on it. So you're debiting rent expense for an additional 24, debiting. So it should be on the debit side. All right, so for the other note, I'm gonna ask somebody to read it for me as well as tell me what they think is the option that we should take here. It's straight line basis. Let me know if I need to go through straight line. If persons don't understand. Yes, Courtney. Guys, don't be afraid to open your mic and speak. You know, I'm here. Go ahead.
The furniture and fixtures has an estimated useful life of 6 years and is being depreciated on the straight line method down to a residue of $15,000.
Yes, and
So,
how do you think we should treat this?
You would say 135,000, which is the capitalized cost, minus
Yes.
the residual value, which is 15,000. That will give you 120,000. And then you would divide it by the economic useful life, because that's the formula for the straight line method. And you would get 20,000 for the annual depreciation expense.
There we go. So I really wanted to be able to share because I have the formulas for that, but he just showed you what the formula was for the straight line method. Straight line method is basically the same amount is being charged for depreciation each year. So what you're gonna do is you're gonna take the capitalized cost minus the residual value and then divide it by the amount of useful life that we expect the asset to have. Everybody clear on that? If you're not clear, stop me. If you need further clarity on it, say something. No, please don't let me go on. You don't understand.
Repeat.
You want me to repeat? Okay, so for furniture and fixtures, it's being reduced. It's being depreciated using the straight line method. Straight line method indicates that for every year, the same value is being accounted for depreciation. To get the depreciation cost, you're going to take the capitalized value of the asset, subtract the residual value, and then you're going to divide it by the useful life that we expect the asset to have. So the capitalized cost for furniture and fixtures can be found in the balance sheet. So right beside furniture and fixture, that assets that's at the top, you're gonna see 135. If you can scroll up from when you finish, Genevieve, so persons can see it. Capitalized cost is normally the cost that we pay for the asset. It's oftentimes at the top in the asset area. So if you look, scroll up one, yes, right there. So if you look right beside furniture and fixture, you see the cost 135. Yes. You're gonna subtract the residual value. Residual value is normally what the cost that's left of the item after it has been fully depreciated. And in the note, it says that the residual value is 15,000. So you're gonna subtract 15,000 from 135,000 and then divide that by 6. And that should give you a 20,000 per annum value.
Teresa, someone on YouTube is asking how you got the 24,000. I don't know if you want to repeat it again.
So the 24,000 that's where we're looking at prepaid rent, right? Right?
I believe so. If you scroll up.
All right, so the 24,000, we were told that we prepaid rent on April 30th. We prepaid rent for 36,000. That prepaid rent is for 3 months. May, June, July. When I started, I had indicated that you should always bear in mind what your year end is, because they tend to use your year end to trick you most times. This is one of the trick questions. If you realize rent is prepaid for 1 month, for 3 months, but 1 month fall out of our year end. So it's for May, June, and July, prepaid for May, June, and July, but we are only supposed to account for May and June. So we need to find what portion of the month of the rent prepaid is for July. So what I did is I divided the 36,000 by the 3 months that it was paid for, and that would give 12,000 per month. Then I multiply that by 2 because we're only supposed to account for 2 months. And that's how I got the 24. Now, because at the rent, prepaid rent column, if you can scroll back, oh, it's right there. Let Jenny make the note first. So it's 36,000. We're going to divide it by 3 to get the per month rent that was paid, which is 12. But we're only supposed to account for 2 months in our rent because 2 months fall in our current period. May and June fall in our current financial period. The only month outside is July. So in truth and in fact, we only prepaid 1 month's rent at the end of the year because we're always adjusting to matter what's supposed to happen at the end of the year. So at the end of June 30th, we should only have 1 month prepaid, 1 month rent prepaid. But in our trial balance, we're seeing where it's saying we have 3 months rent prepaid. So if I scroll back up after posting that, Jenny, just scroll back up for me. Let me show them. So it's saying that we have the full $36,000 prepaid right here. It shouldn't be 36. So we want to reduce it to reflect only $12,000, which is the value for July. So that means we need to take out the months that are in our financial year, which is May and June. And to get the value for May and June, you're going to multiply the $12,000 by 2. $12,000 for 1 month. And that's how I got the 24. Is it clear? Just check on me, Brian, if the person is clear, if they want me to kind of do it a bit simpler.
She said yes, I believe it's clear.
Okay, thank you. So moving on to the other note, computer equipment was acquired on March 1st, 2010, and is being depreciated over 4 years on a double declining method of depreciation down to a residual value of $10,000. So for double declining method, we're going to have to use a net book value.
You never put in a value for your furniture and fixtures.
Sorry about that. Ready for me now? Did we go back up and adjust it? The rent. Let me just answer Roseanne. For Roseanne, so for the rent, we're going to be crediting prepaid rent 24,000, and we're going to be debiting rent expense 24,000.
Okay, Teresa. What persons can do, they can follow, like have their T account drawn up, like their trial balance, and they can just follow, because not everything will allow me to make the notes.
Okay. All right, so for double declining method, what we do is we always use the net book value at that time. So for computer equipment, we currently have no depreciation on it. So if you look on the trial balance, you won't see where there is any depreciation for computer equipment because it was acquired in the year, during the year, right? It was acquired in March. So it's a new equipment that we're gonna have to apply depreciation to. So net book value is $180,000. Now we need to know the percentage that we're going to be using. It's being depreciated over 4 years. My trick to this is whatever year they give me, I put 1 above it. That's my trick of using it. So the number of years that's given, it's always a denominator for the fraction that you're going to be using. So I'm going to be using a quarter. That's the fraction that we're given right there. And it's normally multiplied by 100. A quarter of 100 is 25. That's a 25% that we're going to be using for the section. So 25% is not equal. Use the equal sign beside it and not just a dash, because it may be misleading. Yes. All right, so it's 25%, but that 25% is not for the full year, it's double. So you're gonna always double that amount. So you double the 25%, you should get 50%. Scroll down. All right. So you know your percentage is 50%, but what we have to also note is that we did not have the asset for the full year. The asset was only in the business for 4 months. March, April, May, June. Yes, 4 months. So when we're looking at depreciation for any asset, you need to note how long we had the asset if it's a new asset, because you don't want to apply depreciation for the full year if you only had the asset for 6 months. In this case, you only had the assets for 4 months. So after finding out the depreciation, we need to figure out how much it is for only 4 months. So when we multiply the net book value by your percentage, it gives you the depreciation for the full year. So 108,000 is the current net book value. You're gonna by the percentage, and it should give you $90,000. $90,000. I'm not certain on my side, but I'm not seeing the writing. Genevieve, we frozen?
Are you seeing it? I'm typing. I'm not sure if you're seeing.
Yes. So $9,000 for the full year, but we only had it for 4 months. So you're gonna prorate that $9,000 for the 4 months. And I might just multiply it by 4 over 12, or whatever number of months you have it over 12. But that $9,000 for the full year, but you only want it for the month that you had it for. So for 4 months, and Shania Francis was right. It's 30K, but not in the way that you were getting it.
Oh, sorry about that. I was trying to type out the full formula from the beginning where you multiply the 2 by the straight line rate, and then but I press enter to go into the next line, but it's sent off automatically. So sorry.
Oh, no problem. All right, so anybody want to help me with the double entry that we need to make for this specific note? Come on, mic up, people, mic up, mic up. Anybody on YouTube, Brian? Anybody on YouTube want to tell me what the double entry is? So
Actually, someone on YouTube was asking about number 3, and someone else was asking why 25. I think they're referring to the 25% that you used.
25%. All right. So tell me the specific question for number 3, and 25% because we were given 4 years. So it's a core. Let me try to change how I said it. All right. So we always use the years to determine what percentage we need to use. And we're supposed to be depreciating for 4 years. Right? And for a quarter, what I said going forward is my note on how I got it, because to go to the long root of it kind of gets complicated. Another person gets confused with it. So I normally just use whatever years is given and use 1 above it. There. I don't know how to pronounce him. I don't want to pronounce it wrong. So Jade, I'm not certain if it's wrong or right, but she kind of gave you another way of simplifying it. I'm getting it's her understanding of it, but it's also correct. I think it's somewhere on YouTube, so they wouldn't be seeing it, but it's basically 100% divided by the number of years times 2. Yes. So it's 1 over the amount of years that we normally do, which is a quarter, and then you multiply it by 100 to find out what percentage it is. So you don't want to use fractions to multiply numbers, but you want to always keep it in percentage form. So it's just to convert it from the quarter to a percentage. And then because it's a double declining, you're going to have to double it. And that's it. Number 3, I'm not saying what specific area of number 3, but we're using straight line for number 3. And what we're doing is trying to find the depreciation for furniture and fixtures for the specific year that we're in. And we know we're using the asset for 6 years. And the residual value for the asset is $15,000. So it's normally the cost of the asset, which is the capitalized cost, minus the residual value divided by the useful life. So it's the $135,000, that's the cost of the asset, minus the $15,000, that's the residual value. And then you're going to be dividing it by the amount of years we expect to have the asset, which is 6 years. And it should give you the depreciation cost for that specific year. Everybody clear?
Not really. What do we debit and credit when we get the 20 per annum, the 20,000?
All right, so so look on your trial balance, and I'm gonna ask you. So we know that we have, as I said to you, there's always keys. So if you look on the trial balance, you're gonna see an empty slot that needs to be filled. So you see accum dip for computer equipment completely empty. Accum dip for computer equipment. Oh, wait. Definitely, I think you're the person that was asking a question right now. Are you referring to furniture and fixtures, or are you referring to furniture and fixtures? You're debiting accum dip and you're crediting the depreciation expense account.
Okay, thank you.
So I think I made a mistake a while ago. You're debiting dip expense. Sorry, Jenny, you're debiting dip expense. So all expenses are debited. Just bear that in mind. Expenses are always debited. Whenever it's an expense account, it normally carries a debit entry. Revenue accounts carry credit entry. That's another point that you can probably write down or just jot down. Just add it beside the 40. Everybody clear? Can we move on now? No.
Can you go back over the double decline method?
Okay. Running back to double declining. Can you just pull up the notes on double declining method so we can have person reading?
Teresa, can I try to explain, because the way that you were explaining it about using an additional 1 year, that's
Go
not
ahead.
how it okay. So with the double declining method, right? The economic useful life, we turn it into a percentage. So the question says, hold on, pull up the question on my phone. All right, so the question says that the computer equipment is being depreciated over 4 years. So 4 years is the economic useful life. So we're going to turn the 4 years into a percentage. So 4 years, that's 1/4, that's 25%. Now the formula for the double declining method is two is 2 multiplied by the straight line rate. And in order to get the straight line rate, you take that percentage. Yeah, the straight line rate is a percentage basically. So you multiply the 25%, which is the 4 years, by 2, so that you get 50%. And now what you do is you take the net book value, and remember that the net book value is the current value of the asset. So since it hasn't started to be to depreciate as yet, the net book value would have been can somebody tell me the net book value from the table, from the trial balance, please? It was
180,000.
right, 180,000. So the current net book value is 180,000. So you're going to take 50% of 180,000, which is 90,000. So that's the depreciation expense for 1 year. But we're not. So this was purchased on March 1st, and it's now June. So it's 4 months because it was purchased at the end of March and it's now the end of June. So it's 4 months. So you're going to multiply 90,000 by 12 to get how much is it monthly. And then whatever you get, which was 7,500, I think, you're going to multiply it by the 4 months. And that's how you get 30,000.
Thank you. Can I have your name, please? And I'm seeing you coming, and I'm seeing you on my screen. Can I have your name, please?
Oh, Shania.
Hi, Shania. Thank you very much. That was a bit basic. I'm gonna have to ask you.
Okay.
Yeah. I understand that. I got it.
Sorry. So moving on to the next note. Oh, we didn't do the entries for this one. So going back up to the trial balance to make our adjustments. I don't think I highlighted this earlier, but why I make the adjustments on the trial balance. So when you get your paper, it's for it to be easier. If I did it, I'm just reiterating it. Always try to make a note beside each value that you're going to be adjusting, how much you're going to be adjusting it by. So once you go over to create the statements, you don't have to be going to the notes again to find out what to adjust and where to adjust it. You would have already have everything beside the respective values. So moving on to note 5. Wages earned by employees not yet paid amounted to 15,000 at June 30th, 2010. So wages earned but not yet paid means that we're gonna have a wage expense, but it also means that we're gonna have an accrued amount on the balance sheet. Not yet paid means as at year end, we owe it, and that falls into liability. Once it's not yet paid and we owe it, we have to account for it on our balance sheet. So right here, I normally put like a liabilities or a balance sheet icon, B/S, and then state that's going to be a liability note. So I know when I'm doing up my balance sheet, I should have a liability note coming off this specific of note 5. I have it on my exam paper, so I know when I'm doing my balance and I'm running back through to get the figures, I realize, all right, this right here, I should see it on my balance sheet. So it's always important to make jottings while it's going through like this, because this probably will take you roughly 15 minutes, depending on how quickly you understand each note. It may take a while, but once you have this down pat, it's easier to write the statements. So going back up in the statements, we're going to be debiting the expense account, which is wage expense, and we're going to be crediting the wages payable account. Can anybody just remind me why we're crediting wages payable and not debiting it? I said it earlier when we just started, when I was explaining the basics. Anybody just mic up and say it real quick? It's a liability. Thank you, Cornelia.
Or also because expenses are always debited for the most part.
Yeah.
They will just automatically debit wage expense.
So what you can also do is, so we know what to do here. We know that we have to make a wage adjustment. always start with the account you're familiar with. We know expenses should always be debited. So if you're familiar with expense account, you know they should always be debited. Then you can simply decide what to do to the other accounts. So always start with the account that you know and you're familiar with, and you know whether a debit or credit should be in this account. We have that, Jenny, ready for the other note? Kayla asked a very important
Yeah, we can
question.
move on. Oh,
Excluded
sorry.
the residual. Okay, we exclude the residual value. There we go. Thank you, Shania. Thank you. Shania answered your question, Kayla. So for person on YouTube, let me just reiterate it. I completely forgot I was supposed to say it for person on YouTube. So Kayla asked why we excluded the residual value. So the question told you the residual value of 10,000 to trick you. Always look out for these little tricks that you're gonna put on the paper. It's placed there just to confuse you or trick you a bit, but you ignore the residual value when you're doing the double declining method. It is always ignored until the last year. Okay? Clear for persons on YouTube. All right, so I don't see Brianna coming in with any.
Yeah, I was saying Jay on YouTube is saying she's still not understanding why you're using 25 times. She's still not getting the 20 why you use 25.
They want you to repeat.
I think it's from the earlier part with the 4 years and the quarter and whatever. Yeah.
All right, let me try to repeat. I think Shania did a very good job at it earlier, but we're using the 25 because we're trying to change the 4 years, the useful life that we're given, into a percentage, right? To get a percentage from 4 years, we're basically turning it into a fraction. So it's 100% over the 4 years. And then we're going to turn it into a, all right, hold on. Give me a second. Brianna, I'm going to have to.
Yeah, what did you say?
I wanted to talk to Jay because I'm not on YouTube and I can't access YouTube, because if I do trip, I may lose my internet. But I want to know specifically what area of it she doesn't understand. She doesn't understand why we're specifically using 25, or she don't get the entire workout.
All right, when she responds, I'll let you know. I'm looking in the comment to see when she responds. I believe she doesn't get how you get the 25, but as you said, it's 1 over the 4 to get it.
100%.
And someone in the chat is also explaining it to her as well.
Okay, awesome.
Awesome. I don't, if she comes back and she doesn't understand, just share my number with her and I can probably try doing it better. Okay, okay, Brenna?
All right, no problem.
I can probably send her some notes on it so it's better for her. We're at note 6, I think. Accrued interest expense. Accrued interest expense should be $9,000. When we look at interest payable, we see that the slot is empty. So interest payable is currently empty, and it's saying that we should have $9,000 in that area. So as a liability, what are we supposed to do? Credit. So you're gonna credit interest payable with $9,000. Interest payable is the same as accrued interest. This is another way of stating it. Courtney, I'm seeing your question. Yes. it's depending on how the question is phrased, Courtney. You can't, so Courtney is asking if all the other method of depreciation, of calculating depreciation uses the capitalized cost. It all depends on how the question is phrased, because they may rephrase the question and ask you and say to you that and how the question is phrased and the amount of information that you're given, because you may not be given the cost of the equipment. You may only be told the depreciation for the past 4 years, and it says to you that to find the depreciation for this current year. And you're gonna just be dividing the past depreciation that you're seeing, the accumulated that you're seeing by the 4 year that we had it for previously. So it's depending on what you get and how the question is phrased that determines how you get the depreciation value. Do you understand what I mean? Yes. Oh, okay. So you're talking about general formula. Okay, yes, we use the capitalized cost. All right, so accrued interest expense, everybody's clear on that aspect, and we can move on to inventory on hand.
Can you repeat it, please?
You want me to repeat accrued interest expense?
Yes, please.
Okay, so for accrued interest expense, we should have $9,000 in our trial balance. But when we go back to our trial balance, we're seeing where there was no entry made for that $9,000. So we're making the entry. Accrued interest expense means that we have a liability on our hands, because accrued means it wasn't paid. It should be payable on our balance sheet. And as such, we're going to credit the interest payable account. I would advise to use the account that's in your trial balance, so we see interest payable and not accrued interest. So if you can just scroll back up to the trial balance for them, Jenny, so it's easier for them to see it. So if we look where interest payable is, we see that it was initially blank. But Jenny went ahead and inputted the $9,000 that should be there. But we know it should always be a double entry. So if interest payable should have a $9,000 there, we're gonna have to look for the expense account that match that to add the $9,000 to. So the expense account that matches is interest expense that's at the bottom, and you're gonna add the $9,000 to that account. Is it clear, Money?
Yes, thank you.
You're welcome. Inventory on hand should be, as at June 30th, should be 182. But when we look at inventory accounts, we're seeing 190,000. Anybody want to mark up and tell me what we're gonna do here? And remember that we're using the perpetual method of accounting for goods. You're crediting $8,000 and debiting cost of goods sold $8,000. Keneally and Courtney in the chat responding. So go ahead and just make that entry, Jenny. So we're gonna be crediting the inventory account because we want to reduce it to the amount that should be in it. It should be 182. It's now saying 190. The difference between 182 and 190 is $8,000. So we're gonna credit the inventory account because we want to reduce an asset. Wrong line, Jen. So because we want to reduce the asset, we're crediting it by $8,000. So it is reduced to 182. And we're going to debit cost of goods sold by the $8,000. So the following note is at June 30th, $32,000 of the previously unearned sales revenue had been earned. So going back to the trial balance, we're gonna look for where unearned sales revenue is. unearned sales revenue. So it says $32,000 of it has been earned. $32,000. And the account that's affected sales revenue earned. Sales revenue earned. Subtract, you're not adding it, subtracting it. You want to reduce, so you're reducing the amount in that liability account. And you're adding it to sales revenue earned. Add, increase in revenue, credit. All right, I think that was the last note. Oh no, we have another note. The aging of accounts receivable schedule as at June 30th, 2010 indicated that the estimated uncollectible expense is $5,500. Allowance for bad debt is going back up. So the aging of accounts receivable indicate that we should have an estimated uncollectible expense of $5,500. That is our allowance for bad debts. We currently have $3,500 there. So what you're doing with aging of accounts receivable is we adjust what's already been accounted for to reflect the balance that we need to be reflected. So we already have 3,500 currently in the account. So you only need to add, hold on. I'm seeing the chat, something from the chat. Oh, Sanya, I think Shania answered the question. So can I continue for allowance of bad debts? Okay. So you're going to be adding $2,000 to the 3,500 that's already in the account. So as at the year end, we have the $5,500 that should be in the account. The corresponding entry should go down to bad debt expense. Expense is always debited, so we're debiting the expense account. Everybody's clear on this aspect, right? Any questions? Bernard, just check the YouTube chat for me.
You lost me. Can you go over?
No question on the YouTube, but they said I wanted to repeat on here.
Yes. So the aging of accounts receivable schedule indicated that the estimated uncollectible expense is $5,500. Our uncollectible expense are normally stated in the trial balance as allowance for bad debt. So anything that's uncollectible is normally bad debt. The aging of accounts receivable method of accounting for bad debt is where we're adjusting the balance that we currently have in our trial balance to match the balance that it should be. So there's notice telling us that it should be 5,500. Our trial balance is telling us that it's 3,500. So we only need to adjust the trial balance so it matches the 5,500 that should be here. We have 3,500 in the trial balance already, so only need $2,000 more to make it 5,500. That should be as at the year end. Clear or muddy? Devane, Courtney, or is it? I'm not certain who came in a while ago, but just tell me if it's clear or muddy.
For number 8, excuse me, for number 8, the entries is the debit, the unearned.
Number 8.
Yeah.
Yes, you debit unearned sales revenue and you credit sales revenue earned.
Okay. Thanks.
Right, so we basically went to the journal entry that's necessary to perform this note. The other data area is just is normally for an adjustment in the balance sheet. So it basically means that we're gonna take 25,000 out of notes payable and put it in current, out of long-term liability and put it in current liability. Clear? Devonay, please clarify what you mean by which account do we credit? Which question are you, which note are you referring to? Devonay?
Talking about the last one. Sorry about that. I'm talking about the last one.
The aging of accounts receivable?
Yes.
You're going to debit bad debt expense and you're going to credit allowance for bad debts 2,000. You're debiting the bad expense in the trial balance and you're crediting the allowance for bad debts with the $2,000.
Okay, thank you.
Pardon, did you just say credit bad debt and debit bad debt?
You're crediting bad debt expense. You're crediting you're debiting bad debt expense. You're crediting allowance for bad debt. It's two separate accounts. Jenny, if you could just scroll back up to the trial balance so that they can see it. So allowance for bad debt is a part of your asset area. That's up top. And the bad debt expense is in your expense area at the bottom of the trial balance. So multi-step income statement, I think I highlighted it when I was going through it. Clear? Before I move on, we're clear. All right. So the multi-step income statement is where we're separating operating activities from other activities. And I think I had it when I mentioned it earlier as one of the requirements. When doing this, you're gonna have to pull all the expense that is related to the main aspect of the business and separate them from those expenses that are not related to the main aspect of the business. We're using the perpetual system, Shade. I am going to, how do we know? Oh, Shade wasn't on earlier. So we're using the perpetual system, and that's because we're seeing cost of goods sold in the trial balance and not purchases. If we're seeing purchase and affiliated account, it's purchases, then we know it would be a periodic. But because we're seeing the cost of goods sold account, we know it's a perpetual format of inventory system. So for the income statement, I'm going to give you the net income that you should get, and I'm gonna ask you guys to work it. I am not certain if we're gonna have enough time to go through the entire income statement, but I can give you what the net income should be, and then you can work until you reach that net income. Is that fair enough? And person's microphone, let me know. If you prefer, I go through the entire income statement. We may not have enough time to go through income statement, balance sheet, and then move on to another topic. But I can tell you what the net income should be for the income statement, and you work towards it. I don't have a specific end time yet. Maybe by 11:30. I'm not certain yet. But I want to kind of go on a different other topic. So if you want me to spend time on this, we can go ahead and finish working this question. But because I want you guys to get some practice in, I kind of want you guys to also work it. I'm going to tell you what the net income should be. And remember that we have to separate. So the multi-step, it is very important that you remember that if it's a multi-step on your final exam, you have to separate operating expenses from other expenses. I'm gonna give you a hint because this past paper only has a 1. Interest expense does not fall under operating expenses. All right, Ashley Edwards says on OUR VLE, so people go back and review it and ensure that you follow that method if you get the same question, type of question on your final exam. I'm gonna type the net income in the chat. Somebody can you just share it on YouTube for me as well? I'm gonna say it out loud. Net income should be 37,000. I'm typing it in chat, and I think person on YouTube should hear me. It should be 37,000.
Yeah,
I want
type
person
it in YouTube.
Yes, work towards getting it. Let me just kind of give you some basic outline of it. Please know that we have sales return allowances, and we also have sales discount and trial balance. Those should also come into your income statement. We have bad debt as well that falls under operating expenses. And then, after you find the operating income, you're going to less other expenses. And that is the area that we're going to put interest expense, because interest expense does not fall under operating activities. So the next note is asking us for the statement of owner's equity. Everybody good on that area? You want me to go through it, or you want me to give you the answer and you work it and see if you get the same answer? What's your preferred method of working this aspect? No feedback. I don't like no feedback. I like to hear persons. Nobody?
What was the question?
I was asking for so we have the balance sheet, the cash balance sheet in report format, and statement of owner's equity to go through. I want to do the last note, which is to talk about how to treat uncollectible accounts, but I want to know how well you guys, you want me to give you the answer, and okay, let me just give the answers to each statement, and you guys go ahead and work it, get some practice in for final exam until you actually get the answer that it should be. For the statement of owner's equity, Berry's capital should be $332. Can somebody just type it for me in YouTube as well as in the chat? It should be 332,000. Yes, Lamar. And for the balance sheet, we're doing it in report format. And it's a classified balance sheet. And the total liability, total assets is $547,500. Total assets is $547,500. So I'm gonna skip over let me not skip over the ratios. Let me hope persons understand the ratios. Everybody understand the ratios, or do you want me to go to the ratios really quickly?
Go through.
All right, so we're going through the ratios. All right, so it asks us for the current ratios. Current ratio formula is current assets over current liability. Ha! I just realized something, but okay. If I do the ratios, you're gonna get what to get on this balance sheet, but okay. I'm gonna do it. So total liability. So I'm giving you total assets. Total liability should be total liability and equity. So total assets is equal to total is equal to liability plus equity. Lamar, that's for Lamar. Yes. So current ratio, current assets over current liability, and that's going to give you 322,500 over 110,500. Not certain if Genevieve is writing it in, but that would give your current ratio is current assets divided by current liabilities. And it's 322,500 divided by 110,500. Current ratio should be 2.92 times.
Could you repeat the last part, please, Teresa?
110,500.
They round up, right?
Yes, always round up. So round into 2 decimal places, not round up, round into 2 decimal places. So you should get 2.914 times, round into 2.92 times. Debt ratio is liabilities over assets. Basically, how many assets you have to cover your liabilities. So it's total liabilities over total assets. And that should be 215,500 divided by 547,500.
Hold on, repeat. Is it that ratio you're doing now?
Yes, debt ratio.
Not distract, sorry.
That's okay. And that should give you 39.36%.
All right, I can repeat the last part, the total assets, please.
Total assets, we have it up top 547,500. Ready for the other ratio? Everybody's clear on this ratio? Gross profit percentage. Anybody wants to give me the formula for gross profit percentage? Nobody?
Gross profit divided by net sales.
Okay, there we go. And that would be 459,000 divided by 787,000. 58.32%. Yes, current ratio is times. So at the end of current ratio, you should always have the times beside it. Please remember your figures should always carry a comma to represent the 100 and your dollar sign. Your percentages as well should always be on. And don't write shorthand formulas if you're writing, well, you're not writing, if you're writing a paper, yes. For a structured question, try not to do shorthand workouts. You tend to get marks if you show your full working and they realize your logic is right, they may give you the mark and not mark everything incorrect. So always try to show as best as possible whatever workings you did, so that it's easy to trace how you got a specific answer and can then, based on that, decide if you're gonna give you the mark or not for the question. Please remember, headings are important. Inventory turnover, they gave you what the inventory on hand was for 2009, and the formula for inventory turnover is cost of goods sold divided by average inventory. Cost of goods sold divided by average inventory. And to get average inventory, it's opening plus closing divided by 2. Average inventory, the formula for average inventory is the opening inventory plus the closing inventory divided by 2. So your formula should be 328,000 divided by 155,000. And inventory turnover is represented in times as well.
Could you repeat, the formula, because I'm not seeing the writing. All right, you're moving it. All right.
Cost of goods sold over average inventory. To get average inventory, you're adding the opening inventory to the closing inventory, and then you're dividing it by 2. Okay, so for the part I wanted to hint at, so state 2 methods used to treat uncollectible accounts. With the aid of journal entries, briefly explain the steps necessary in recording collections. On an account, which was previously written off as bad under both methods. Assuming that the debtor was reinstated, which impact would this transaction have on the account receivables of the business? This can come separately as a question, or it can come as a last part of one of the big questions. The 2 methods that are used to treat uncollectible accounts is the allowance method and the direct write-off method. Thank you, Courtney. To record collections on an account which has been previously written off as a bad debt, under the allowance method, you're going to debit accounts receivable. Let me go slower. So if we got a question asking us that if an account was previously written off, how do we treat it under the allowance method? First, you can probably use a space beneath the question, Genevieve. You're gonna first So the two methods first is allowance method and direct write-off method. Gregory, have them in the chat. Direct write-off method. So to record collections on an account that was previously written off as bad debt, under the allowance method, you're going to be making 2 entries. And these 2 entries is if we reinstate the debtor. So it's under the allowance method, just write, start a new box. Then I think it's better to start in a new box. So that's for the first part of this question, the state to the 2 methods. So it's saying now with the aid of journal entries, you should be able to explain the step necessary to record in recording collection on an account, which was previously written off as bad under both methods. And you should always, and you're assuming that the debtor was reinstated. So under the allowance method, you're going to be making 2 entries. You're going to be debiting accounts receivables and crediting allowance for bad debt. Just do a DR accounts receivable and CR allowance for bad debts. Your second entry is going to be debit cash and credit accounts receivable. And this is under the allowance method. Please bear in mind that this is also if the debtor was reinstated. So under the direct write-off method now, so we just did the allowance method, we're gonna go to the direct write-off method. You're gonna debit cash credit allowance of bad debts. Finish. Or assuming that data, what impact would this transaction have on the accounts receivable of the business? The account receivable of the business would remain the same as it was after the write-off. Everybody on that, can you repeat what you said about the allowance method? So under the allowance method, you're making 2 entries, and this is assuming that the data is reinstated. You're going to debit accounts receivables, and you're going to credit allowance for bad debt. Then you're also going to debit cash and credit accounts receivable. Yes, the impact on the accounts receivable will remain the same as it was after the write-off. So if you realize that, so you look at the allowance method, you're debiting the accounts receivable and then you're also crediting the accounts receivable in your second entry. So the row not certain I'm pronouncing your name right. Please don't mind me for killing your names. I'm horrible with names. But it's basically a canceling entry right there. You have a debit and a credit to the account receivable. All right, so I'm gonna probably ask you guys to take probably a 2 minutes breather. I was hoping to go through bank rec next. Is that okay for everyone? Just say a yes or a thumbs up. I'm not certainly fine with me. So just take a 3 minutes break. I'm gonna look for a question to share with you guys in the chat, and we go through bank rec. Brian, I'm just checking with you to ensure that persons are okay with that option, or if they want me to go to a different.
I didn't hear what you said, Teresa. Can you repeat, please?
I am asking to check in with the persons on YouTube. I am hoping to go through bank rec next. Bank reconciliation.
I'm not seeing anyone saying anything on YouTube, so I guess it's okay.
All right, so we're on a 3 minutes break. I'm gonna look for a question and share it with the person in the chat, and then you can also share it in the group once it's shared in the chat. Get up and stretch your legs for persons who are sitting down in front of the laptop. We don't want to be going full force on this with no stops. I don't want you guys to get tired. No, I'm not saying that we're gonna get bank rec. Normally for a structured question, they tend to go for the corporation and merchandising questions. For the big structured questions, they'll give you probably options. I'm not ever getting options. Yes, so it's similar to what we just did for the merchandising.
Hello. Do you have like a suggested solution sheet that we can work by ourselves? Like you can work like a question bar and then look at it after, like something like that.
Some questions is on Orville, I think it's read the worksheet and answers. I think so. I think I saw them today.
Yeah, see, okay, so then you saying there's some on there's solutions there too, Yanni?
Yes, I think so.
All right.
I should think so, yeah.
Teresa? Hello?
So, hi everyone. A 3 minutes break. A break almost is up, but I'd like to give someone the chance to share their screen so that they can, be hands-on in the process. I have done this course before, so I would love to give someone the chance to share their screen for the bank recon that we're going to do next. So if you want to share your
I made Ariana co-host. That's Ariana Bailey. So once Teresa finds the question, I'll send it to her and she'll share her screen. Matter of fact, I'll talk to Ariana so that she can get the document and share it. She's one of the students.
Okay, awesome.
share this in the chat. So everyone just please download it and open it on your end. I'm also sending an email to Brianna to share with, I think it's Ayana.
Hello, can I ask a question?
Yes, go ahead.
Good night. I see a question in the chat that says that Kenila said she was looking at the notes and they said that for the direct write-off method, no allowance account was made. So why, when you reinstated it, did you have an allowance in the journal entry?
Reinstated. The journal entry should be debit, cash, and credit. What was the entry you had earlier? I think it should be bad debt expense. I'm seeing bad debt expense here. What was the answer we had
So it
earlier? We
should
had
be
an allowance method before. I'm sorry, I'm not seeing the screen.
all right. So the correct journal entry should be
Debit, cash,
debit, cash,
and
and
credit, bad
credit,
debt.
bad debt expense. All right, cool. Thank you.
Cornelia, can you just make up for me?
Yeah.
All right, so I'm thinking going to your notes. That's the correct entry, right?
Well, all I'm seeing is just when we write it off where we debit bad debt expense and credit accounts receivable. I don't see anything about reinstating, but I would think you will like credit debit
Crediting back.
cash, and I think we would like end up debiting the accounts receivable. Yeah, wait,
Credit
no,
bad debt expense and not
yeah,
accounts receivable.
yeah.
We're putting it back onto the expense section.
Okay, I was just wondering because I saw allowance on the screen.
I'm sorry. It may just be an error on my part. So for person on YouTube, reiterating, I think for the last question, I made an error when I was stating the entry for under the direct write-off method. When you're reinstating, you're debiting cash and you're crediting bad debt expense, just providing some clarity. All right, let me know when everybody's back and ready to start with the banker question. Oh, I also have another one to show you. What's the name of it? It's banker in my file. Here it is. I'm gonna share another question that I want you guys to do on your own. I'm gonna give you the answer to it and you work towards it. Let me just share it in the chat before I jump into the banker question that we have. All right, Lamar is ready. Is YouTube? Is the person on YouTube, are they ready, Brianna? Are they back?
I believe they are ready.
All right. So just pull up somebody, whoever is sharing, just pull up his screen. I'm just sharing the additional question.
I'm not, wait, did you send the question in the, Teresa, email me the question unless, oh, Ariana got the question, okay.
Email it to you. I think, oh, there it is. It's up. All right, just give me a second. Let me just pull up. Let me just share the additional review question in the chat. All right, so we're gonna do probably as, yes, just confirm that person in the chat. I see the additional question I added for banker. All right, seeing Javier. All right, so the cash account for remedial code, just read through. We're doing like questions 1 and I think 2. Scroll down for me. Who's presenting? Can you say your name for me? I don't want to say it wrong.
It's Ariana.
Hi, Ariana. All right.
You want me to scroll down more?
No, man. Yes, I want to go down to the instructions. Trying to find my hard copy of that sheet.
Don't mind the layout. When she sent to me, I just put I have a layout for bank recon, so I just put it there. I don't know if it's a problem.
No, it's not a problem.
Okay.
I like the vibe. I like the vibe.
So you want the entire question, as in A, B, and C, just to run through?
Yes, I just want to see what the instructions are.
Oh, okay.
Go back up. Wait. This is the one I sent to you?
Well, this is the one I got, yes.
Go back up. Because I have A, B, and C on my paper. I'm wondering what is happening. Huh?
A, B, and C as well. It's just the way you call it? The template in between them, that's why. So B is generalized the necessary entries. C is state the amount of cash that should be included in the balance sheet.
Okay. All right, no problem. Can you do me a favor? Can you just minimize the space in between the different pointers up top? So just highlight those and minimize space so they just come up beneath each other. You can probably see on one page and don't have to run over. All right, there we go. So the cash account for remedial medical co as of April 30, 2014 indicates a balance of 18,885. The bank statement indicates a balance of 23,775. Sorry. On April 30, 2014, comparing the bank statement and the accompanying canceled checks and memos with the records revealed the following reconciling items. So we have checks outstanding totaling to 7,840. We have a deposit of 3,580 representing receipts on April 30th had been made too late to appear on the bank statement. We have a check, the bank collected 3,780 on a note left for collection. The face of the note was 3,600. A check was collected, a check was drawn, and bank service charges came on the statement. So we're gonna go through this and we're gonna say what's gonna happen to our bank rec. Can somebody just quickly share the worksheet in the group? Kayla is asking for it to be shared in your accounting 1005 group so she can follow along. Somebody just quickly share it. It's in the chat. So anybody that have it on their phone can just share it. Thank you. So I want you guys to make a note. So in that space beneath your last point, I want to always make a note. What's your cash balance and what's your bank balance? So your cash balance is 18,000. Your bank balance is 23,000. 18,885. Sorry, it's 18,885. 885 on it. $18,885. Bank is 23,775. Then we're gonna go through each note, and in red, like with your pen on in exam day, if you got this question, you can just make a note beside it. What is gonna happen to the what balance in the statement? So a check outstanding totaling 780. Would this affect the bank balance or the cash balance? Asking anybody here to just jump in and tell me what they think would affect.
The bank.
Bank balance, is it going to reduce or increase? The check is outstanding.
Reduce.
Reduce.
It's going to be reduced. Okay, so just write reduce bank balance in red. Yes, reduce bank balance. A deposit of 3,580 representing receipt on April 30th had been made too late to appear on the bank statement. What does this affect? Bank or cash? So deposits are going into the bank from the cash. So we made the entry in the cash book already. It's just on the bank statement. So now this is going to affect the bank statement. And the bank statement would increase. Everybody following along with that, or you want me to explain why it's increasing? No comments? So everybody's clear, okay? The bank collected 3,780 on a note left for collection. The face of the note was 3,600. So this entry is already in the bank statement because the bank collected it. But we didn't know the bank collected, so it's not on our cash book. So right then and there, we know the cash book is affected, and the cash book should increase to reflect the collection of this amount. So you're gonna increase the cash balance. A check of 770 returned with the statement had been incorrectly recorded by Remedial Medical Co. as 700. The check was for the payment of an obligation to Copeland Co. for a personal account. So this came back with the bank statement. And it's incorrectly recorded by the company. So right then and there, we know that the cash book is affected because we made the wrong entry. So it should be 770, but we only have $700 there. So the cash book balance is going to decrease. A check drawn for 330 had been erroneously charged by the bank for 3,300. So right there we have a bank error, the bank having the wrong thing on their statement. So the bank balance is going to be affected. I want somebody to tell me what they think should happen here. Should the bank reduce or increase? Come on, don't get sleepy on me now, please. Can I have some feedback?
Sorry, which one are we doing?
We're doing V. The check drawn for 330 had been erroneously charged by the bank as 3,300. Increase. Mishika. All right, don't try to pronounce her name. Yes, Michelle. They're gonna increase the bank. Bank service charges. We know it's in the bank balance, but it's not in the cash book, so the cash book is affected. And we're gonna decrease the cash. All right, so what I want you guys to realize is when you look at each question, you want to look, all right, which account is it already in? For the first one, checks outstanding total 7,840. If it's outstanding, it means that it has not been paid out as yet by the bank, right? But in our bank statement, we have that it's in our cash statement, we have that's already paid out. So we're just adjusting the bank balance so that it's actually paid out to get the balance that we should have. Why would we increase for V? All right, so for V, a check was drawn for 330, but the bank actually charged your account 3,300, which is more than what it should have been charging. So you're going to, so initially the bank would have taken it out of your account. So they're taking out more than what they should be taking out of your account. So you want them put back in there what they're supposed to put back in there. So they were only supposed to take out 330, but they took out 3,300. So we're gonna put back what they shouldn't have taken out, and that means we're gonna increase our bank balance. Understand? Okay. So we're gonna just go ahead and run through what the balance, the bank reconciliation statement should say. Just go down to your template. Let me try to use the template. So the balance as per bank is input your balance. Can do a direct pull from up top. No man, leave it. Don't adjust anything. We can retype them afterwards. The bank balance is 23,775. So you're going to add the outstanding deposits. So if I go back to our notes, we saw where we need to increase the bank balance because we have a deposit that should have been made, that's made late, that hasn't appeared on the bank statement yet. So that's 3, look for all the increased bank balance options, and you're going to put them in beneath. That's the check that was drawn up incorrectly, as well as the deposit that is outstanding. Scroll back down for me and put in the corresponding figures. Outstanding deposit, which is a late deposit, is 3,580. And for the bank error, can somebody tell me what we're going to record for the bank error? Because remember that they charged us 3,300 when they should have charged us only 330. How do we get the value? $2,970. Yes, because we're gonna subtract the amount that they should have charged us from the amount that they actually charged us, and we're gonna put back the balance in our bank statement. So the balance should be 2,970. So for outstanding check, you can just probably close out the various check numbers. Normally we're given check numbers, but in this scenario we weren't given check numbers. We were given a total figure of 7,840. Let me just give you the figures up top so you can just put them in. 3,580 plus 2,970 is gonna give you a total of 6,550. Added to the amount that we had above, give you a total of 30,325. So right beneath the 6,550, 30,325. We're letting unprinted check. So our adjusted bank balance should be 22,485. Remember, you should have the correct date. So that should be April 30. Everybody understand what we did so far? Any questions? Brenda, just checking with YouTube for me, please. That persons are clear on it. And if you don't understand, let me know. Clear. Everybody else is clear? Don't be afraid to say you're not clear. Repeat the step, please. All right. So we're gonna go back to the first aspect. You don't have to erase the figure that you have there. I'm just gonna ask you to scroll up and down when I refer to various figures. So they told us initially what our bank balance was. So if you scroll back up in the question, you would have been told what your initial bank balance starting off. All right. It said to us that our bank balance was 23,775. Having gone through the notes, we recognize what we needed to increase and what we needed to decrease on the various bank or cash balance. Right? And we see where we have to increase the bank balance in two aspects, where we have a deposit that is late and should appear on the bank balance, but has not. And we have where there was a bank error made that they charged us more than they were supposed to charge us. And those two situations required us to increase our bank balance. So going back down to our bank rec statement, we're gonna input them and show where they're increasing back our bank balance to the amount it should be. So we inputted the 3,580 for the outstanding deposit that was late. And we also adjusted back our entry for the bank error to a total of 30,325. But we also have instances where the bank statement should be reduced. So if you scroll back up to the notes, having gone through, we realized that there were some checks that weren't paid out. They weren't paid out, which means that we have them reduce bank balance. The first note, I was looking for the note. The first note says check outstanding total 7,840. We're gonna have to reduce them from the bank balance because they were not paid out as yet. So going back down to the bank balance, we showed where we subtracted that amount that wasn't paid out yet from the bank balance and took us to a total adjusted bank balance of 22,485. Mr. Booth, could you just confirm if that's clear? I want somebody to volunteer to go through the other aspect of it. I can help you at wherever you're stuck, but I want to have you guys a bit more involved in it. So anybody want to volunteer to start off the cash section?
So you go some boom and then you go look how much the cash from let's say at the beginning. That was 18 something. Just drop that in that table. Yeah, just drop that in that table quick and fast. Just drop that in that table quick and fast.
Input it. Okay, input it on the table.
18K.
Sorry, dear, I didn't hear. So can you repeat?
Go ahead and repeat for her, please.
I'm saying, yeah, that goes about my and look back on the top of the question, and you see the 18,800 and something. Where was the starting back balance with the cash book? All right, then after you do that now, then you go to books, right? You go to books and you go to you realize okay, point
Go back up to your notes and look at the
yeah, go back up to your notes. Yeah, up to your notes. You realize point 3, you realize that one bank collection as me. So that means you're supposed to get 336 for the note, isn't it? But then you realize hold on. Oh, 36 for the note and then I collect 3,780. We say, oh, because a note. So yeah, man, we have to get the interest because a note doesn't make bad news and note carry interest. So we have one section for the note, one section for the interest, isn't it? So just put the note where we already know for 3,600. I'll find the difference. Oops, 180. We know that at interest. It's still simple maths. And we know that I add that as both of them are supposed to add to it. We don't establish that already, isn't it? And then you go so boom and you look on point 4. Point 4 deal with the cash balance there, so I say. I look and say, all right, it is supposed to be 770, right? We're supposed to pay them 770, but you only pay them 700. That well, we only write 700. So I say we kind of short as well. I say with the other 70 that we're supposed to take out. So I say, hold on there. I'm on the take out that 70 that for me they quick and fast, you see me? Cause you see me, I 770 we supposed to take out, but then we never take out the 770, you see me? Because I'm on will I write and I write fast and go put 700, you see me? Let's give him a blind with that one there and just take out the 70.
All right, so I want to break you. Up top, I see you were the entry you made for the 3-6, the notes. I don't agree with it. Anybody is on my side?
Why is that?
All right, so you got up. The bank said to you that they collected a note.